one of our market educators, part of the Alpha team, right? So you guys heard from Corey. Jay wasn't able to make it here. He's on his first trip he's done with his family in 10 years. As you guys know, Jay's been going through a lot of personal stuff, so we were absolutely happy to excuse him from today's meeting. Guys, this presenter, I've been able to get to know. We have a call every Monday. I sit with him, I talk with him, we strategize. He is one of the most just down-to-earth, humble dudes you'll ever meet, right? Just so relatable, easy to get along with. He was a former professional bodybuilder, which when he comes up here, at some point, dude, you got to bring some of your pictures because it's unbelievable how good this guy looked. He still looks great, but he was freaking Arnold. But that to me, the reason I bring that up is because it shows when he goes after something, he goes all the way. So he got into trading. He's now the alpha trader who focuses on cryptocurrency. So guys, get on your feet, make some noise, bring to the stage Noah DeFreitas.
All right. What's up, iGenius? Huge congrats for everybody making it to the end here. Hopefully I won't disappoint. Today, we're going to get into the juice of cryptocurrency. So if you want the meat, this is what we're doing. I was told specifically not to get so much into my story, but really drive the value of cryptocurrency. So I'm going to go ahead and dive in here, but I want to know, who are my crypto folks out there? All right, well, this is actually going to make it a little easy for me. But really my goal here is to show everybody this space, at least in the vision that I had and the vision that I've seen. So we can start diving in. So the real question that I typically get, and you might get the same thing when you start in this space, is why would you get into crypto, right? And me being the crypto educator, I would assume that, me telling somebody hey, what do you do? And I say, hey, I'm a trader or an investor. Oh, great, tell me more. And I say, well, I trade crypto. And then immediately, it just kind of that ball drops. Or have you ever told your family that you invest in crypto? That feeling of just what are you doing? And what I really want to do here is give you the perspective of what I had to get into this space, and it's why not crypto? And I'm going to give you guys some points on this. So I've been in this space for a while. I'm not going to go too much into this story, but really, crypto was the one space, and I've been in this space for quite a while, that I consistently saw lives being changed. Anybody here seen anybody's life changed by cryptocurrency? Right? I started out trading stocks, I went into bonds, I went into Forex, I went into future, and nothing compared to what I saw the average individual do in cryptocurrency, because it's really where the performance is at. And I'm going to probably hop off the stage here because I have a lot of charts here. But what I want to tell you guys that not a lot of people know is cryptocurrency is actually the top performing asset of the last decade. Did anybody know that? And I'm just going to give you guys the numbers. So for example, this chart right here is the total crypto market. And in the last decade, this is 2015 to today, crypto has gained 85,000% over the last decade. Pretty crazy stuff. Bitcoin at the bottom here, 33,000%. And a lot of people compare these metrics to different benchmarks, and we can just use a few of them right here. For example, the top right, I know it's hard to see, but this is the stock market. S&P 500, typical benchmark you'd measure performance across, this is 178%. So quite a big difference. Or gold, for example, over the last 10 years, 85%. So crypto blows things away. It is the number one top performing asset in the last decade. So, and a lot of us were not very proud about saying hey, I'm investing in cryptocurrency, but all right, that's why people don't go across the front. But what I want to show you here, who would be afraid of saying that Michael Jordan is a good bet, right? Probably a pretty good bet, right? But Michael Jordan has 6 rings, right? Bitcoin, in the last decade here, or last 13 years, let's see who has the rings here. 2011, Bitcoin. 2012, Bitcoin. 2013, Bitcoin. 2014, that's REITs. Bitcoin, Bitcoin, Bitcoin. bonds, Bitcoin, 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 commodities, Bitcoin, Bitcoin. So 11 of the last 13 years, Bitcoin is the Michael Jordan of the asset classes. And I think that's pretty substantial. A lot of us don't think about this space in that regard. And again, this is the space that I've seen most lives changed in, but I feel like so many people are missing the boat when it comes to this space. So I'm just going to lead you down a path on where I see this space going, how to understand this space, and in the end, I'm going to give you 3 practical steps on how you can gain a compelling edge in this market. So here's crypto versus the internet over here, if you can see that. Very easy. Crypto has basically been outpacing the growth of the internet, which is a pretty substantial piece of technology. You know, we're all using it nowadays. It's outpacing the internet by a factor of 2. So it's growing faster than the thing we use every single day. So you might be thinking right now, okay, you know, it grew a ton, I probably missed the boat. That's probably what most people are thinking right now. But if you actually look at the current size of this market right here, the total crypto market is sitting at $2 trillion, okay? Gold, 11 trillion, US stock market, 48 trillion, the global stock market, 96 trillion, and the total money supply, 100 trillion. So just to conceptualize this, you could multiply the cryptocurrency market by 10 times where it is now, and it would still be less than half of the size of the stock market right now. So we're still infants here, okay? So one thing I want you to take away from that is crypto is the Michael Jordan asset right now. If you're not looking at it, I don't know what you're doing in this space, but this is a big deal that they're not telling you about, right? So next thing is really what's the use case for this? So it's really hard to know why are all these people buying Bitcoin. The first thing we're going to talk about is decentralized program money, i.e. Bitcoin. Then we're going to talk about the smart contract space. I know we're diving into the weeds, but sometimes the weeds are nice. There's good vitamins in the weeds. Okay. So one thing we haven't experienced, over the globe this has been experienced, but we haven't really experienced this too much in the United States, and that is this money printer right here. So, you know, maybe seen the meme, money printer goes burr, but unless you look at this chart, you really don't know what this actually looks like. So this is the United States money supply. This is M1. If you look all the way back here, I think it's like, it's too far for me to see, like 1995 or 1950s, right? Look at what happened here during 2019 and 2021. Do you see that giant stick in the air? That's the money supply, everybody. The money supply was multiplied by 4. Every dollar in existence quadrupled in 2 years because of the pandemic. And that's pretty significant. So if you're in the United States, you're probably now hearing a lot more about this Bitcoin thing because there's a downstream effect because of this money printing, and that's inflation. So anybody realize that things got a little more expensive over the last few years? Anybody check their car insurance rates? Mine went up like 97%. Buy some eggs. Eggs were $3. Sometimes they're now $12. Fast food. Have you ever tried to feed your family with fast food? Not to say that's the thing to do, but you know, it's like $30, $40. To the point where McDonald's and Starbucks are getting killed because nobody's buying it. Fast food today is too expensive for the average American, and that's because of this inflation. So the question is how bad could it get? And we're going to look at some examples here on where inflation can get pretty bad. So we have Hungary. They actually had a point where every single price of goods and services multiplied by 2 every single day. So 200% growth in inflation every single day. Zimbabwe, they had about 100% every single day. This is at the point where people are paying for fruit with briefcases of cash and using cash as basically firewood, right? Really crazy, crazy stuff if you're not familiar. Now, I'm not trying to be all doom and gloom, but does it at least make sense to have an asset that actually hedges against something like this? And this is where we're getting into Bitcoin. And just recently, the largest asset manager in the world, Larry Fink, if anybody know BlackRock here, anybody know who BlackRock is, right? They manage $9 trillion. Anybody know what the GDP of Japan is? Not to say that you guys should, but the GDP of Japan is $3 trillion. BlackRock could buy Japan 3 times over. That's how big these guys are, and they are now in Bitcoin. Larry Fink just said that Bitcoin is a legitimate financial instrument, one of the most powerful men in the world. He says that people are using this as a hedge against monetary debasement. Not to ever wish monetary debasement on anybody, but we just saw it can happen. So doesn't an asset like that make sense? Something that anybody can really get a hold of. So what makes Bitcoin different in this case is really it's programmed decentralized money. So there's only ever going to be 21 million Bitcoin out there. It's just programmed into the system. And every 4 years, the amount of Bitcoin that is brought into supply, that's mined, is cut in half. So it's programmed scarcity. After all 21 million are gone, that's it. So the inflation rate, just like we were talking about, the inflation rate is about 0.84% right now. We just had 9% inflation. And this inflation rate, you can see on this chart, is essentially going to go to zero. And I apologize, my cat toy laser pointer might actually be dying. Okay, maybe you guys can see that. So that's really the case for Bitcoin here. Now, other cryptocurrencies is a little bit different of a case. These are called your altcoins. This is where smart contracts are really the game changer. So if we think about how our digital world or our economic world works right now, who are the players, right? We only have a few players in this game. There's Google, there's Apple, JP Morgan, Meta, you got our government, you have Amazon, you have the music industry, the movie industry, Visa you have to make payments with. Only a few players run the game right now. And that's the digital economy of today. But the digital economy of tomorrow might be something vastly different because we're starting to realize what happened to all of our data. Everything we do online is now owned by some other dude. But what if we can start to bring that power back to the people? And this is where decentralized applications are changing the game. So for example, all of our data is very centralized, right? You have like Amazon Cloud Service, Google Cloud, and that's a single point of failure. They are just hoarding all of our data. But like, for example, Filecoin here, Filecoin is meant to decentralize your data, where anybody can actually have a hardware device and provide data services across the blockchain. So you couldn't go to like Amazon, like, hey, I want you guys to use my hardware to host your data. It's just not going to happen. But with Filecoin, that can happen. Or like our Ethereum or Solana, what are those? Those are blockchains where you can create a decentralized application on top of those. So if we want to make an application today, where do we have to put it? The Google Play Store or the Apple Store, right? There's like 2 places to do it. Now with blockchain technology, you can create those, and nobody necessarily governs them, so it's bringing the power back to the people for creating applications. Other things, like if you look at Aave here, if anybody knows what Aave is, if anybody wants to go take out a loan right now, what are they going to do? They're going to check your credit score. Well, on the blockchain, they don't care about credit score. All they care about is, do you have the collateral to back that loan? So a lot of us, we have a lot of financial exclusion because of these centralized systems, the government, JP Morgan, whatever it might be. Not say it's horrible, there's definitely perks, but there's a lot of reasons we can't get into financial products right now or opportunities because there's a lot of red tape. And the blockchain is really solving a lot of those things. Like social media, for example. There's such a thing that is decentralized social media. Right now, who sees your post? Whatever the algorithm wants to do, right? Well, what if we made a decentralized social media where the people can govern how the algorithm is created and actually bringing value back to the people? Last one I'll talk about here is Propy. And these, I'm not saying like to invest in any of these, that's a house-looking one. If you wanted to buy a building, can anybody easily buy a building in here? Can I just go out and be like, all right, I want to click and buy that building? Well, the blockchain, you can. With Propy, they actually fractionalize buildings to where the average individual can go in and just own a piece of a building because of smart contracts. It's really removing the centralized system and making it programmed. Really, really powerful stuff. So I'm going to talk about some things that actually make this decentralized application, like what's the ideal decentralized application? So number one is permissionless. There's going to be no barriers to entry. Right now, there's a ton of barriers to entry. Just if you want to trade futures, right now in the United States, you have to be what? An accredited investor, which means you have to already be a millionaire, already have $1 million net worth liquid, or you have to make $100,000 for 2 consecutive years. Not that easy for just trading futures that we can do, on like an offshore account. But yeah, typically that's what you have to be, or at least in crypto futures. The next one is, what does that say? Uncensorable. So right now, if we post anything on social media, well, who governs what we can see? The algorithm. A lot of these applications will be uncensorable. Another one, there'll be decentralized governance, which means the people, if you own any of these tokens or you run the network, you will actually have voting power on how these applications grow and adapt. If you want to make any changes to these applications, it will be due to a 51% or greater vote. So we're bringing democracy back to our digital economy. And the last thing is monetary rewards. All of these things you're actually going to get paid to do. If you want to host a node for Bitcoin, you're going to get paid in Bitcoin. If you want to host a node for Ethereum, you're going to get paid in Ethereum. So for example, there's an application that's called Brave Browser. Right now, if you don't want to see ads, what do you have to do? Pay. You have to pay somebody to not see ads. In the digital world, the Web3 world, it would more go, they're going to pay you. So if you use Brave Browser instead of Google Chrome, they will actually pay you to show you their ads. So pretty cool stuff when it comes to what's happening, in this upcoming digital shift. So I'm going to talk a little bit about where we are in positioning. I think positioning is critical. So what about 2024? Where are we at? So this is where charting is very, very helpful. You can see here that the market for at least Bitcoin is pretty cyclical. You can start to see patterns, and this is the beauty of technical analysis, is you can view patterns. Well, what's very significant about this pattern is every time Bitcoin breaks its prior high, what do you see? There's a big extension in the market. So Bitcoin currently in 2024 just broke its prior highs. Unless it does something it's never done before, we are very much aligned for another extension upwards. Another thing that happened this year is the Bitcoin spot ETF. I know I'm going into the weeds, but this stuff, it's powerful. If you want, knowledge is power in this game, I promise you. So the spot ETF, this is like a crypto bro's dream. We one day thought that the big boys were going to get in, and guess what? They got in. The Bitcoin ETF is how institutions can get exposure to Bitcoin without owning the Bitcoin. So a lot of people know that, Bitcoin's doing well, it makes sense, but institutions, big money, they don't want to hold on to it. If you just hold your Bitcoin in like a ledger, what if you're a big company and you're holding on to the treasury fund in Bitcoin and you lose your passphrase? That sucks. So they needed a product to feel comfortable holding Bitcoin, and that is a ETF. So this means that companies like BlackRock, Fidelity, they are going to be the ones holding the Bitcoin. They're going to be the ones responsible for it, and they're going to issue shares on that Bitcoin that companies can feel comfortable buying. So there, we have created a product that never in history has been available for cryptocurrency. And just to show you how popular it is, the ETF is actually one of the most successful financial products of all time. They don't want to tell you that. So in the first 30 days that this Bitcoin ETF launched, it did, 2 times the amount of the gold ETF over the course of 250 days. So it took the gold ETF, which was a bit significant deal, 250 days to do what the Bitcoin ETF did in 30 days. It did half of that, okay? And then, in terms of assets under management, which means how much did they buy? They bought $50 billion of Bitcoin right now, which is extremely significant. That's quite a chunk of change. So we have the ETFs. The next thing we have is our halving. This is the big one a lot of us should probably feel familiar with. The unique thing about Bitcoin is that every 4 years, the new supply of Bitcoin gets cut in half. So this is a really interesting dynamic that has a lot of significant effects for Bitcoin. So the one thing you need to know is that the new supply gets cut in half every 4 years. So last halving, we had a reward of 6.25 Bitcoins for every block mined. Now we have 3.125, so it got cut in half. So the problem with this is those that mine Bitcoin, their revenue just gets chopped. You can see miner revenues over the halvings, it just gets chopped. So this is a big reason we're not seeing the price of Bitcoin skyrocket. But if you look at this chart, all of those yellow lines, those are each halving event. After the first halving event, Bitcoin went up 8,000%. After the second halving event, it went up about 2,000%. After the third halving event, it went up about 570%. Pretty significant, probably something to pay attention to. But a lot of people are getting impatient saying, well, it hasn't pushed up, so it must be a failure, right? This is where technicals can be helpful. This is where understanding where this push and pull is critical. So it actually takes a little bit of time for this supply shock to catch up. Because these miners, if they're half as profitable, what they're going to be doing is selling their Bitcoin to survive. So they build up all this Bitcoin in reserves, and when the halving happens, basically their revenue gets cut in half, and they have to just sell a ton of Bitcoin to survive until the difficulty of mining difficulty goes down or the price actually goes up. So on average, to make things simple, it takes about 150 days before the price of Bitcoin actually starts to catch up, the mining difficulty actually goes down, or the price just gets bid up because of the supply effect. So after that, the next thing that's happening is the same exact thing not only to Bitcoin, but it's happening to altcoins. We're actually seeing the Ethereum ETF become approved. So just like the Bitcoin ETF, what if, say, half the inflows happen for Ethereum? Maybe $25 billion in inflows for the Ethereum ETF? That could be pretty wild. We've never seen that ever in the history of cryptocurrency yet. And there are issuers actually applying for a Solana ETF. This is about to bring a level of legitimacy to crypto, especially in the United States, that has never happened before. Big, big, big money. BlackRock, like I was talking about, they're in this big time. Okay, so big thing I wanted to do here is give you guys, now if you're like, okay, I get it, hopefully, I get it that this is probably something I should be paying attention to, but what can I do? Like, how do I even get an edge on this market? And long story short, my cousin, he's actually the one who got me into trading. And one day I was talking to him, I was like, you know what, I want to be into cryptocurrency, I want to teach people, but I don't know if I should because I'm not an expert. He goes, Noah, do you understand how new cryptocurrency is? He goes, if you start right now, crypto's new for everybody. Anybody right now can be an expert if they just put in a little bit of time. So there's actually a huge edge that you guys can have in this market if you just put in a little bit of time. So here are 3 steps, 3 exercises that I want you to think about if you want to gain an edge in this market. The first one, and this will absolutely change the game for you if you apply this step. This is becoming a student of the top 100 cryptocurrencies. Sounds pretty simple, and what I can tell you is this is only going to take less than a month and 20 minutes a day. So what you're going to do here is you're going to go to a directory for cryptocurrency. CoinMarketCap.com is the #1 place to do this. And just on page 1, right after you hit click enter for CoinMarketCap.com, you're going to get a list of all 100 cryptocurrencies. And all you're going to do is this simply. Click into each one, go to the website, and read the white paper, okay? Probably going to take a few minutes per cryptocurrency, about 20 minutes per day. Get 5 per day. You'll be done in under a month, and you will have a compelling edge on the market. Why? Because now you know what's in demand. If you understand what's in demand, you now know, A, if a new project comes along and it's cheaper, it's faster, it's solving the problem better, you now see an opportunity, right? Or if you don't see anything come along that's beating what's in demand, you now know what to hold strong in. So this exercise alone will change the game for you, and it'll take less than a month to do. Definitely worth it. Number 2, you might find a great project, right? This is where people get caught up. So there's a relationship between value and time, right? And where the price is, right? Value, time, and price. So what a lot of people will do and make a mistake of is say, oh, I heard this project, it looks amazing, I see it's going to be one of the top performers, but they don't understand where the price is in relationship to its prior highs and prior lows. You know, what's the common mistake? People buy high, right, and sell low, but you want to sell high and buy low, right? So a very, very easy exercise that anybody here can do is simply going to TradingView, typing in whatever cryptocurrency you want to type in. We're using Litecoin in this example. You're going to zoom out to a weekly or a monthly chart, and you're just going to get an idea in practice in understanding where the price is in relation to its low versus high. Now, this isn't to say that something high can't be bid higher. That happens all the time, but not always. You know, I'm sorry, that happens sometimes, but usually it doesn't. So you want to understand where the lows versus high is. If it looks like a flagpole straight in the air and it's just vertical, that's probably the worst time to ever buy. Of course, I could be wrong. It could just keep going to infinity. Never seen it happen yet, though. So you want to look at charts and start to see charts because the whole concept is you need to find the opportunity before the masses. You don't want to find the opportunity after the masses. You know, people talking about, oh, you know, look at Pepe, Solana, whatever the narrative was. But if it's up 200, 300%, 1,000%, it's probably not a good time. It's already been found out. So what you want to find is something that seems very powerful. You know, it seems that it's potentially going to be in demand, but the price has not caught up. So really easy exercise. Final exercise, this is the most important exercise. It is going to take a little bit of calculation, but this is how you become an actual trader, an actual investor, and that is understanding how to position size and manage risk. And I'm going to teach you how to do this very simply, and if you can do this, this is going to change everything for you in this game. Because the biggest reason people fail in this game is they don't know how to manage risk. It's all about not getting blown up. It's all about survival. Because if you're in the most powerful asset class in the world, I bet you if you just survive long enough, you're going to catch a winner, right? And that's the beauty of being in this space. And I've seen it with my own eyes many, many times. People who survive long enough in this space, they're just going to catch the averages. But what most people do is they think that this is going to be the one and only investment. They're going to invest their entire life savings. They're not going to know how much they're going to lose. They're going to believe that the market's just going to go up. But unfortunately, we can't just time the bottom exactly. So what you need to do is learn how to size your position. And this is such a simple exercise. Just need a few calculations, and you'll be an expert at this. So number one thing you need to know is what is your max risk per any trade? What is the maximum amount of money you feel comfortable losing? In this example, we're just going to use $50, okay? So maybe say I am comfortable only losing a maximum of $50 on this trade. The next two things I need to know is simply my entry price, the price where I'm going to enter, my stop loss price, and then the distance between those. So in this example, the entry price, I can't even see it here, but whatever those prices are, the difference between the two, the difference between my entry and stop loss is 20%. So all you're going to do is take your maximum risk, $50, divided by 20%, and now you get your position size. So in this example, I believe it's $250. And if you put your stop loss at that level, the maximum you're going to lose is $50. Everybody keeps investing to say, okay, I'm just going to invest that it goes to zero. That's good on paper, right? It's good ethereally. But it's not so good when you have to hold a losing position for years, because it can happen. Not everything is guaranteed to go up. So why not just put a small stop loss in there, get out, retry later, so that you have capital to play the game. So many people are just holding bags underwater, and it's preventing them from actually getting out and finding other opportunities. And that is really, really the name of the game here. So hopefully that was helpful. So a few closing remarks here. Hopefully I've proven to you guys that crypto is one of the most powerful assets in the world. It's the Michael Jordan of assets right now. And despite its current growth, we're really at its infancy compared to where it could be. And this whole game here is bringing the power from the few back to the masses. And we're really at a tipping point where Wall Street wants in. And that's humongous. And most of all, you guys are all part of a community who are all here to help you gain an edge and master this market. So my question to you guys is, why not crypto? Sweet. Thank you, guys.
All right. Let's give it up for Noah.